Good afternoon, everyone. This is Katie Novotny calling in from Premier Marketing. I want to thank you all for joining us. I know a lot of you are coming off of your busy season that AEP ended a couple days ago, and these couple days afterwards just seem to be cleanup time, but I do appreciate you taking the time to join us. Today, we wanted to talk about some disability. We are getting more calls than ever here at Premier regarding disability insurance. I think after the pandemic and all the changes that we've seen in the past 2 years, people are more aware than ever of the loss of the normal lifestyle and specifically their paycheck. One way or another, they have been impacted by this pandemic, and I think that there is a growing concern across the United States of what happens if I would get sick, if a family member would get sick, or if I would have to have some adjustment to my job. So what we decided to do was today have our regional wholesaler from Assurity Life, Macy Lenertz, discuss the impact of disability, where we can see how we can better protect our clients' income, and how to capture that market, how to bring it up to your clients, and just some general sales ideas. So with that, I'm going to pass it over to Macy, but before I do, quick reminder, if there are any questions as we're going along, please feel free to type them in. We will either answer them right then or as we go through the presentation, and definitely a full Q&A at the end of this presentation as well. So with that, Macy, you ready to take it away?
Perfect, I am. Thanks so much, Katie. And just like Katie said, thank you so much for all of you attending today. Very excited to go through this information. I think what you're going to find today is there's a lot of tools. There will be a lot of information, so make sure you're taking notes or you go back and listen to this recording after, because this, just like Katie said, is a product that we are truly seeing a lot of interest in and a lot of business in. And we think it's going to be huge next year, just as more clients are realizing the need. So as you start, if you got ahead of this presentation a form for a quote request, what I'd like you to do is either on that form or on a separate sheet of paper, be jotting down names of individuals and or industries in which you feel like there is a niche for you to reach out to that client or to that industry, someone in that industry where you can potentially talk about the need for income protection, okay? So think about that as I talk specifically about markets that this works well in. Now, Assurity Life is a certified B Corporation. We are balancing purpose and profit here, so highly recommend you go out and look at what that looks like if you don't know already. We've been in business since 1890, so a mutual organization truly here to help you and your clients. Very excited to be here today. So we're going to start it off with a bang, rather than just like what every other carrier does and talking about product specs, which we will get to at a high level. I want to start this with tools for you to help make the sale, close the deal, and get your client the coverage that they need. So write this down, take a screenshot. This is one of my favorite tools when bringing up the need and helping a client realize the need for protecting their income. So you put these 5 words listed at the bottom of the screen in front of your client, and you say, please rank these in order of importance, okay? Now, what a lot of times we hear coming back is that the home, the health, and the retirement are 1, 2, and 3 spots. A lot of times retirement is in the 1st or 2nd spot. The health is typically 1 or 2, and then the home will be 3rd. Auto is generally 4th. And so what we see as kind of traditional patterns here are these are more or less tangible items, right? The home is something that they make memories in. They physically walk into their home. They need somewhere to sleep. Makes sense. Their auto, again, is tangible. They need it to get to and from work or to and from school. They need it to get groceries. It's something that they're constantly touching, seeing, thinking about every day. Retirement. Unfortunately, a lot of people don't love what they do for work, so they do want to get to that point where they don't have to work. So that is front of mind for people. Health, obviously very important, whether it's insurance or whether it's being able to pay for health bills as they come up. That is something that's top of mind, especially in today's environment. But what a lot of clients are not thinking about is the income, the thing that pays for all of the other items that they ranked in front of it, right? So without income, how are they going to save for retirement? Pay for a car, pay for a home, mortgage, or rent, pay for health insurance or bills as they need it, right? So this is the piece that we need clients to realize, that without that base protection of their income, it's really going to be hard for them to live that lifestyle that they're used to living if something happens. Lastly, I'll just say, remember that income a lot of times is intangible. We're getting automatic deposits, so this exercise is just to help your clients realize the need of something that they might not be thinking about already. Another tool for you, when you're talking to your clients about disabilities, okay, and you use the word disability with them, what is going to be the most common thing or answer that they will think of? A lot of times the word disability is associated with, for example, wheelchair or a handicap placard or an accident or injury, something that is extremely detrimental, perhaps even less of a reality or a likelihood to get, right? Well, here's what I recommend making sure your clients understand is that while, yes, this product that you're suggesting for them is going to help cover those things that they just thought of. If they were in a car accident and had to be in a wheelchair, if they need a handicap placard sign, anything like that, there's a lot more to this policy. It covers both accident and injury, or illness and sickness, as you can think about it. It's 24/7 on and off duty coverage, okay? Here is a list of the most common causes of what we see causing a disability. Number one is musculoskeletal and connective tissue disorders. That's 29% of disabilities caused by that. And specifically, you can think about this as, let's say your client was a baseball pitcher throughout high school, maybe college, or they lifted weights, and now they've got something where they need a rotator cuff surgery. Maybe they have a bad back and it bothers them. So musculoskeletal, connecting those muscles and skeleton, bones together. So musculoskeletal and connective tissue disorders make up the majority. Now, the second most cause or reason for a disability would be cancer. Cancer alone causes 15% of disabilities. Mental nervous disorders. This is your anxiety and depression. 9.1% of disabilities are caused by mental nervous disorders. And then rounding that out, 9%, folks, 9% of all injuries and accidents combined are the result of a disability. So one thing just to mention here, just in general, as a stat that you can use, about 90% of disabilities are caused by illnesses versus injuries. Okay, so again, while this policy protects both, clients a lot of times not thinking of the number one reason why they may need to use it. Now, we do have 4 products here at Assurity. We are going to talk just more plainly about our Century Plus Disability Income Plan. That's our bread and butter product. It actually has higher non-medical limits and better pricing than our Simplified DI. So I generally recommend you focus on that one. The Simplified is, quite frankly, just a little bit outdated and not sure if it will be around for the long-term future, but we will talk about Century Plus DI. We're going to cover briefly what business overhead expenses, and the last one I like to refer to as our secret weapon, graded benefit disability income, so hang tight for that detail. Again, we're going to keep this high level today, okay? Disability income or income protection. Who can you target and what does this product look like? Issue ages available, 18 to 60, okay? That's based on nearest birthday. And we are looking at something called an occupation class, which is what does your client do for a living? And with Assurity, we are going to rank them essentially of how dangerous their job is. So a 4A occupation class with Assurity is going to have lower rates and some more benefits available in the way of riders, benefit periods, etc. And that's going to be anyone who does more or less a desk duty job. So real estate agents, insurance agent like yourself, be great to start off with a disability policy on yourself. Anyone in that type of category, very low risk. A 3A, nurses are a great occupation to put in that category. Someone who generally wears a tennis shoe to work. Generally, again, we're going to go from 4A being the lowest premiums and then all the way down to 1A being the highest, I'll call it. 2As, you can generally put here your cosmetologist. Some other occupations might be in the way of some potentially farmers could fit into this category. And then 1A are going to be your high-risk occupations like your construction workers, truck drivers, roofers, anything. Police officers is another great one, just to give you some examples. But we'll go through some markets here in the next couple slides. Moving down to that next bullet point. Maximum issue limits are between $8,000 and $20,000. That is monthly benefit amount, okay? And just so you're aware, disability income, carriers generally can consider about 60% of a client's income for coverage. There does need to be some incentive for the client to return to work once they're healed back up, but up to $20,000 monthly benefit is going to do a very nice job at keeping that client living the lifestyle they're used to living. Okay, cover a lot of different ranges there. Now, benefit periods is one I want to hone in on just a little bit because our product, folks, is guaranteed renewable to age 65 and then conditionally renewable to age 75 if the client's still working full time. So no matter what, the policy is going to stay at the same rates until age 65, but this benefit period portion is how long Assurity is going to continually pay a claim to your client as long as they're continually meeting the definition of disability, which we're going to talk about on the next screen. So you can choose a 1 year, 2, 5, 10, or to age 65 or to age 67 benefit period. Now, the reason you would choose a longer benefit period versus a shorter is if the client were disabled in the way where if they had a 1 or 2 year benefit, but the disability lasted past then, they would not be able to get claims past the 1 or 2 years of their benefit period. So generally, longer terms are a little bit more popular here with us. Elimination period is a wait period, how long your client has to remain disabled before they get their first claim check after they make their disability claim with Assurity. So you can see that's ranging between 30 days and 365 days. One thing I want to point out that's not on the screen is disability payments are made in rear. Okay, so that means that they're made at the end of the month. So when you're working with your client, if they're choosing a 90-day elimination period, you're going to want to make sure that they, in essence, have an additional 30 days of funds where they feel they are comfortable in order to continue living that lifestyle before they get their paycheck, okay? So a shorter elimination period is going to be more premium, but a lot of times those shorter elimination periods are more popular because that's what fits that client's lifestyle. We talked about how this product is guaranteed renewable, and we do have riders that we will go through. But I do want to talk about this screen, and what I typically say here is I want you to stop if you don't take anything else away from today's presentation. This is one of the most important features of this product, okay? With a disability policy, there are 3 different definitions of what a carrier will consider a client to be disabled and therefore eligible for their benefits, or not disabled, not meeting the definition, and so they're not going to pay. Now, Assurity automatically includes what's called a true own occupation definition, and that is the best definition of disability, and that's automatically included for the first 2 claim years, okay? Now, what this says is that anything that keeps the insured from doing their own occupation, their substantial material duties of their own occupation, is going to qualify them to be eligible for benefits. So with this even means if the client is able to do a different job. So for a quick example, if we think about a nurse who over the weekend slipped, fell, and broke her foot, let's say, so she no longer can be running to and from the bed stations. She's no longer able to do her substantial material duties of her own occupation, but guess what? She's got 2 working hands. She can go sit and maybe be a receptionist at the front desk. She could go be a cashier somewhere. Well, with Assurity, we're saying even if you want to do that, you're still not able to do what you were trained to do. So we're going to pay you anyway for those first 2 years. Okay. After the first 2 years, after the first 2 claim years, if you are still able to work in any capacity, then we'll stop paying the benefits. Now, what can you do to make sure that that definition lasts a little bit longer versus having the payment stop if she's able to work in a different capacity? Add the own occupation rider, okay? That's going to extend that best definition out. It's not extremely expensive, and it's going to extend that definition out past the first 2 claim years if they have a longer benefit period. As you can see on this screen, there are a whole slew of riders that are available to add to the product to not only customize this product for your client's needs and budget, but you can also enhance your commission very easily this way. Okay, one rider that I want to talk about is return of premium. And just to give you a sample quote of what this disability policy looks like, I ran a 35-year-old male. And we're going to assume he is a computer programmer, which is a 4A occupation class, that best occupation class. We're going to say he's non-tobacco, and I ran this for a 90-day wait period and a 5-year benefit period. Their most common type of policy. Now you can see here that the total is $88.02 a month, but I want to break this down. So if you look toward the middle of the screen, this is how to read our quotes. The total disability monthly benefit amount for making $60,000 a year, we're able to offer the clients $3,400 a month if they become disabled. We automatically, on the next line, include a partial disability monthly benefit, meaning if the client, after being totally disabled, returns to work on a part-time basis while they are still healing, they're back to work part-time for up to 6 months, we'll pay half of that benefit amount, just automatically included. Okay, so at that point, they'd be getting $1,700. But if we look right below that, here's the breakdown. The base policy itself for $3,400 a monthly benefit amount is $40.75 a month. The 5-year own occupation rider that we just talked about is $3.88 a month, right? Super affordable, very much worth it in my opinion. Now this client's 35 years old. We are going to assume that they have at least another 15, 20, 30 years where they're going to be working. So in that, they have the room to make more money as time goes on. So I added what's called the guaranteed insurability rider, which would allow them to add additional coverage after 2 years of the policy being in force without providing medical evidence of insurability. Guys, that was just under $4 a month. Very much worth it. And then you can see this last rider, return of premium. Okay, now this is about the same premium as the base policy itself, which to clients, that's going to be a sticker shock, right? Sticker shock to them, higher commission for you. It's good and it's bad. All in all, this is good, and let me show you why. But before I do that, let me just mention here that the losing, and I guess when you're talking to your clients, seeing this price, whether it's $40 a month or whether it's $88 a month, what you can explain to them is $88 a month would be, is that worth it for losing out on $3,400 a month for 5 years, which is $17,000 that this policy is able to pay them just the first time. This policy can be claimed on multiple times, okay? So $17,000 is the potential return of benefits if they need the policy. But what's also really neat is that they can get all their money back if they don't use the policy. With that return of premium rider, again, we saw the cost about double with this. This is an investment piece though. At the end of 30 years, we're returning all rider premiums, the base premium, we're returning everything back to the client. You can see that $31,280 due back to the client at the end of the policy at age 65 if they don't use it. Now, if they do use the policy and we paid out an amount lower than that $31,280, they would be eligible for a return minus the claims that were paid out. Okay, so again, you can see that this is an easy way to boost your commissions. It's a great option for the client because if they need the policy, it's going to be there for them. If they don't, they'll get their money back. Easy question, okay? So that's a quick look at just a sample quote, some of the riders that you can add on. I do want to just briefly cover underwriting so you know what to expect. And it's kind of weird saying this as a salesperson, but underwriting is one of the best parts or one of my favorite parts about this product. So we take a traditional approach. And what that means is at time of application, we are going to ask for potentially labs exam. Now we do non-medical underwriting up to $5,000 of monthly benefit. So the likelihood that your client will have to submit labs and exam is very low. But we may ask for some income verification. And that's going to change depending on whether your client's a W-2 employee or a 1099 self-employed employee, okay? Now we do all of this, we ask those questions up front so that at time of claim, we don't have to ask those questions. All we need is a signature from the doctor saying, yes, they are disabled, they have XYZ condition, and we're going to wait for the elimination period to be satisfied and then make that payment. We're not adjusting, if they're making lower income at time of claim than they were at time of app. We're paying them based on the policy at time of application, at time of issue, not off of time of claim. Okay, it's a quicker way to get your client the money that they need at that time. Now we do look at occupation or job duties and sometimes work history. So you do want to make sure you know what is your client doing for an occupation and then job duties more specifically. So if they're in construction, are they supervisory duties only? Are they on site? Or are they doing manual labor? Those are 3 different occupation classes. So get that detail from your client up front. On that sheet that I referred to at the very beginning, there is a spot listed for the occupation, okay? We want to know their income. You can give us the monthly amount or the annual amount, but we have to know that in order to base a monthly benefit amount off of the income piece to get a policy out. So we need to know how much money they're making. And then health, if there's any health conditions or concerns, let us know. Now that's another beautiful thing about Assurity is that there's 3 things that we can do before declining a policy. So you're rarely going to see a flat out decline with us. The first thing we can do is a exclusion or rating. So let's talk about exclusions, okay? So let's say the client has a very bad right knee and they're often missing work. Maybe they just recently had surgery. This is a big red flag, right? It tells us, hey, there's a potential claim here. Well, what we might do is say, we're going to issue this policy as applied for, but we're going to put an exclusion on your right knee, which means if you are disabled in the way of your right knee is causing the disability, then we're not going to pay you the benefit. 2 things about exclusions, sometimes they can be removed, and they always include the wording except for fracture by trauma, okay? If they're in a car accident and they fracture their knee, then we would pay the benefits. The other thing we can do is a little bit less invasive. So if they have a bad right knee, let's use that example again, but they're not often missing work, maybe every once in a while, maybe they go to the doctor, once a year or so. So it's a little bit of a concern, but not a major one. We might put a longer wait period and a shorter benefit period on that specific knee, that specific body part, but then issue the policy for the rest of the body as applied for. The other thing that we can do, if this is truly a client that maybe has had cancer, just very high-risk medical client, we can take you to our secret weapon, which is our graded benefit disability income product, okay? Now, this is a separate product than the one that we just talked about. There are 3 major differences with this policy, and I just want you to be aware that this is here, okay? If you submit an application with Assurity for our regular Century Plus plan, and we have to, for some reason, decline that policy, we will reach out and ask you if you want us to review that same application for a graded benefit disability plan. If you say yes, we don't need anything further. We are just going to see if we can offer this product. So 3 major differences between this product and our Century Plus. Number 1 is cost. Okay, we are incurring a higher risk client, so the premium is going to increase a little bit. Now, it's not astronomical. We do have lots of business flowing in from this policy, but it is higher priced than the Century Plus. The maximum benefit period is the second difference. You can see 10 years would be the maximum benefit period, but again, this policy is guaranteed renewable to age 65. And then the way that this policy pays out potentially could be a little bit different. So with a sickness or illness claim, we would pay out a percentage of the benefit in policy years 1 or 2. And again, those are policy years, not claim years. And then if it's an accident or injury, it's always going to be paid at 100%. So if there's not even a claim until policy year 3, or there's an accident claim at the very beginning, they don't even have to worry about the graded portion that's in the title of the product itself. So phenomenal opportunity for you to not only be able to save some business, but get this client some coverage that they truly need, even if they're a high-risk individual. So that's a brief overview of Assurity's DI product. I do want to take the remaining couple minutes here, and Katie, I'm not sure if we'll get to that CI today, but we'll certainly try to get through this here. We do want to go through some niche markets of where you can really hone in on this business and reap a return. So we're going to talk about 3 quick markets: middle income Americans, small businesses, and the pink collar. So Assurity is very much focused on middle income Americans, and what that's defined as is someone making up to about 150, sometimes 200,000 of annual income, that and below. So we get a lot of your blue collar, Joe lunch buckets, your construction workers, police officers, truck drivers, but we also see a lot of real estate agents. Nurses are huge, computer programmers. I'll go through a couple more examples on this slide here. Anyone in a management occupation or management role. There are 7 million people in the United States with that title. or a form of that title, okay? They're making about $118,000 a year. There are about 1.6 million Americans who are software developers and programmers that are making about $100,000 a year. And we have about 1.6 million individuals in the United States that are engineers making about $96,500 a year. So what you can take away from this, not only do these individuals, there's a lot of people in the United States you can see that fit into this category. They are making a decent living, a really nice living here to where they can afford a nice policy. These are also going to be very approachable people. They're not the doctors and lawyers that hundreds of agents are chasing after. These are people who need to talk to you that no one's really focusing on. So you're going to have the grasp of the market by talking to these individuals. And guess what? They know that they're making a good amount of money, so it's a good policy, but they know that they are going to need this coverage if they can't go to work. So it's a perfect balance of the two, and it's going to be a great volume play for you. Now, the second market I want to cover today is small businesses truly yield big opportunities. There are more than 5 million small businesses in the United States, and 39 million employees in those businesses represent 35% of all workers in the United States. So guys, this is a huge opportunity to jump on. And not only will you work with, if you reach out to small businesses, you're going to work with the owner. You're going to potentially have an opportunity to protect the business expenses. So you've got two policies right there. Then you have the opportunities to reach out to maybe the owner's spouses, children, spouse, I should say, singular. And then you also have the opportunity to reach out to those employees of the small business. So that just all in itself, one contact, one relationship can yield huge opportunities with small businesses. And now, why is Assurity a good opportunity for that solution? Well, we truly, again, are focused on middle income Americans, which a lot of times include these small mom and pop shops, small businesses. 3 things that we can do for small businesses. Number 1, as long as the business owner owns at least 10% of that business, we're automatically going to increase their income by 20%. We know a lot of times the money that they're making is turning around and going right back into that business, so we're giving them more monthly benefit amount just because of that. We can also increase their occupation class for better premiums and more benefits to choose from. And then if we get 3 or more policies under a common employer, everyone can pay for their own, or we can do a list bill, but we're going to give everyone 15% off of each of their premiums, and everyone can continue their policies at that discounted rate if anyone leaves the group. So it's a perfect opportunity for you to take this solution as a full package portfolio to those small businesses. Think a lot of times of your beauty salons, coffee shops, sometimes dental offices, chiropractor offices are good ideas. And lastly, the pink collar, these are women in the workplace. So we know a lot of times agents are still focused on males, which is great. Males need the coverage too, but dual income families are on the rise, and women a lot of times are being left out of the conversation. So make sure that you're doing your best job to protect both the female and male of the house. And where women are working, where we see a majority of this business come in, a lot of times it's going to be nurses at the bottom ranking there. Nurses, 91.1% of women are in that space. Now we can do nurses as our top or second top occupation class. They only need to be working 24 hours per week. Teachers, social workers, convention planners, and then anyone else in that health service manager role would also be a good opportunity. So Katie, I am going to ask you to step in here. I know we're right at time. We didn't get a chance to cover the critical illness today, but we covered everything for disability. So I'd like to see if you want to continue on or maybe open up for questions. Okay, perfect.
Absolutely. So feel free, please. You did such a good job. I don't even see questions coming in, but I think that there's a couple things. And one I got this morning was, what is Assurity's view after the pandemic? What are you seeing? What kind of benefits are most commonly quoted on DI? And just kind of the beginning talking points.
Yeah, absolutely. It's a phenomenal question and one we've been getting a lot of. So I'm going to start by saying this. I just recently talked to our chief of claims, and I said, what's going on with our claims as far as the last 2 years, people working from home? We've seen a lot of sickness in the world, right? I will say that COVID-19 is claimable on this policy, although, again, we have a minimum 30-day elimination period. So a lot of times that's not going to fall under that category just because they have to be continuously disabled or, in that case, sick for us to pay out, but it is a claimable opportunity. So anyway, going back to my initial point here, we have truly not seen a major difference in claims, which will tell you a couple things. It'll tell you, number one, that just truly clients day to day, what they think of as disabilities, again, a lot of times are going to be those accident and injuries. Well, a lot of times those sicknesses too are going to be a major play, but we're seeing risks generally stay about the same as far as claims go. Now, we have seen a little bit of a spike, but it's not enough to say, hey, we're going to increase rates or anything. So this is a good thing in the way that all of our premiums are remaining the same. We are incurring good risk for the company to be able to remain strong, level, and sturdy for our clients. But the other part of that, and where my question goes to, are these people being reached? We have had a ton of individual clients, not agents, but clients, reaching out to Assurity saying they want disability income. So that tells me maybe someone doesn't know that there's a policy that can cover middle income Americans protection. There's a huge need out there for it. So if this is a space that you're looking at getting into, more people want and need this coverage. And I think as we start seeing more people understand that and we see more policies being written, I think that we'll see a little bit of a difference in claims there. But making sure your clients know that injury and illness 24/7 on and off duty is really, it's covering that client all the time. So know that there's huge opportunity out there, okay? And you have the opportunity right now to capitalize on that. So Katie, I don't know if that answers your question, but as far as Assurity stances, we're not putting any restrictions on anyone right now.
Perfect. Next question is going to be, how do you look at first responders?
Yeah, we love first responders, EMS, fire, police, send them our way. So one thing you should know is that whether they're federal or state employees, generally they're going to be state employees. We have to automatically assume in underwriting that they have 60% of their income covered by an in-force policy already. Now, earlier I said disability carriers generally can consider 60% of someone's income, right? With these individuals that have that coverage in there, we can generally offer an additional benefit. And a lot of times what I've seen is an additional $1,500, $2,000 of monthly benefit amount that we can offer. 2 points about police officers specifically that you need to know about is their current coverage is generally on duty only. So as you're talking to them about additional income protection, make sure that they take a look at their policy, and if it's on duty only, have them transfer that need into a policy that's going to cover them both on and off duty. I'll tell you a real quick story, Katie, and I'll make this brief. Was working with an entire police department of over 1,000 police officers with an agent a couple years ago, and the story that someone told of why they wanted to get coverage. So police officers are making a decent living, but not great. A lot of them have families. He was working overtime. He was in his uniform. He clocked out. He was on his way home. About a block from the police station, he was in a car accident and was disabled, but the disability plan wouldn't pay because he was technically off duty. So his family could have had an additional benefit to help them live their lifestyle, pay for groceries, while that police officer was recovering if they would have just gotten a little bit of extra something on the side. So we love first responders to keep that as short as possible.
Perfect. Another one, any maternity coverage?
Good question. We get this one often. The answer plainly is no. So maternity is not generally considered a disability. And you'll find that to be common throughout most carriers, where where women are going to generally find maternity, disability, or maternity coverage is through their employer, sometimes through group plans. Now, one thing we do include is complications due to pregnancy is considered a disability with us. So if there are complications due to pregnancy, it's automatically included in the policy that would be a payable benefit.
Another question was, do you have flyers and brochures regarding these products?
We absolutely do. So feel free to reach out to your upline Premier or Assurity directly if you're contracted with us and you know how to navigate our agent portal, AssureLink. They're all under the marketing and training section. It's a blue triangle. And then you can go to disability specifically and download or order hard copy materials to use as you see fit.
Perfect. If you are unsure of being contracted, please feel free to give us a call here at Premier. I'm happy to pull the contract, see what we have set up, what we don't have set up, and if we need to get you appointed. So that's never going to be an issue. Well, Macy, I think you handled it. I can't thank you enough. This was a great overview, a lot to think about of how to put these type of sales on the books for 2022. So with that, please feel free to give me a call here at Premier. Mandy and I are more than happy to answer any questions that you have. And from there, I wish you all a very happy holiday if we don't speak to you, and best of luck for 2022. So have a great afternoon, and we look forward to hearing from each of you. Take care. Thanks, Macy.
Thanks, everyone. Bye-bye.